Hello, I'm Kevin Flynn, and welcome to Avalon's Market Minute. Markets managed to cling to gains last week after starting with 2 days of triple-digit gains in the Dow Jones, when optimism about a deal on the fiscal cliff took on a life of its own. As we get closer to the end of the year, some investors are worried about performance and getting left behind if there is a deal. Others are convinced that the Santa Claus rally is a law of nature, and most of all, there are many who remain assured in the belief that some sort of deal will inevitably be put together in the last few days of the year. All of them have been ready to buy on any whiff of a deal. A month ago, I would have said a deal by year end was odds on, but now I feel the odds are against it. The tone in Washington changed last week. The two sides have taken to blaming each other for going off the cliff as if it's already come to pass. The Sunday morning political talk shows showed no optimism, with Senator Joe Lieberman saying he now thinks we will go over the cliff. Market futures are pointing to a sharply down opening on Monday and have been since Friday night, despite Christmas Eve having been up 4 years in a row. It'll be a short trading session on Christmas Eve, incidentally, with the stock market scheduled to close at 1 p.m. It's still possible that some kind of extension or kick the can deal is put together this week that will allow the markets to rally. My advice would be not to fight that rally, at least not initially. There's a possibility of selling the news, but the market likes to go up more than it likes to go down, especially at the end of the year when performance fees and bonuses are at stake. However, I believe that a bruising battle lies ahead on the budget and on the debt ceiling. The two sides are digging in. The president won his election, but the House Republicans won theirs as well, and both are convinced of their mandates. The question for investors is, when will the markets decide to worry about it? For now, there is excess optimism about a deal, any deal, and the recent economic data that has really shown nothing more than a Hurricane Sandy-related rebound and some seasonal buying. But that kind of data is likely to continue through at least this week, possibly longer, and while they may not be signs of genuine strength, Wall Street strategists are already selling them as such. If there is a fiscal cliff deal, I suggest you surf the wave until it tires and then move to the sidelines quickly. Eventually, the bubble will pop, and when it does, the market will move down quickly. It won't be a crash, but it won't be pleasant. And remember, the market always rallies up to the edge of the cliff. I'm Kevin Flynn, and thank you for listening to Avalon's Market Minute, and have a very Merry Christmas.